Welcome to Mex Moves, our weekly podcast on Mexico business and finance. This is Damien. How are you, Eduardo, today?
I'm doing well, Damien.
Good. So this week, we're going to bring you two interviews, one with Carlos García, the president of AmCham in Mexico, and also the country head of Valero Mexico, on the current state of US-Mexico business relations. We're also going to speak with Raúl Livas, energy consultant and former COO of Pemex, about the government's rescue plan for the company that was unveiled this week. And Eduardo and I will break down the CEO change at Walmex, MercadoLibre's Q2 results in Mexico, and some other hot topics making headlines this week. So Eduardo, why don't we start off with Walmex? I mean, as you saw, Ignacio Caride stepped down with immediate effect as CEO and board member of Walmex after just 15 months in the role. Christian Barrientos, who was the CEO of Walmart Chile and a longtime Walmex executive, has been appointed interim CEO, and there's some speculation that he may get the permanent job. And Guy Lorero, who's the chairman of the board here in Mexico of Walmart, and also the regional VP responsible for Mexico, Central America, Chile, Canada, remains in charge of overall strategy. So there's been a lot of speculation, as you can imagine, on why this change, which came as a big surprise to the market. Walmart is Mexico's biggest private sector company with hundreds of thousands of employees. And I think, well, for sure, the second quarter results were disappointing. The net income fell to 11 billion pesos, and a big fall on a year ago. The EBITDA margin came down a bit as expenses growth outstripped revenue growth. And there's a sort of sense that maybe Walmex is kind of losing share to some of its key competitors, like Chedraui in certain parts of the country, and then on the lower level to Tiendas 3B. And there's sort of, I think, a bit of a concern that on operating discipline with costs outstripping revenues, cost growth outstripping revenues, too much focus on tech and telco and health, and not enough focus on the sort of core things that have made Walmart so successful in Mexico: everyday low prices, operating efficiency, and store level kind of execution. Barrientos, he's 26 years with the Walmart Group. He used to run Bodega Aurora between 2012 and 2017. And he seems to have done a good job at Walmart Chile with strong e-commerce push and market share gains. After the announcement, Walmex hosted a call with Wall Street analysts, and the message was no dramatic pivot, and you wouldn't expect that with Guy as the chairman staying as the chairman and the one responsible for that, and the former CEO responsible for the overall focus. But the message from the analysts and the notes that I saw, Eduardo, was sort of back to basics in store operations, acknowledging that strong e-commerce depends on physical retail working well, improving inventory turnover, I think the working capital issues, improving labor efficiency, which may have hurt expenses, and then being able to convert those efficiencies into lower prices and get that flywheel kind of going, which has been such a key part of Walmart's success here: low cost, low prices, lower cost, more scale, lower prices, and so on. And I think that Barrientos, seems to have done a very strong job, in particular in e-commerce in Chile. Walmart has a stronger infrastructure in Mexico in e-commerce than it had in Chile, so I'm sure they're going to continue to focus on that. What's your take on the change of?
I guess like the market and you, Damien, I was surprised. 15 months, it's not a long time to give someone a chance to have an imprint on a company, especially the size of Walmart. But I guess the pressure is on, and the company saw that it needed to move before anything gets worse. Maybe not necessarily that would be what they would say. But yeah, I mean, you could see the La Comer posted better earnings. Soriana has just come out with a very aggressive campaign of lower prices called Preciasazos. And so I think the heat is on, the competition is rising, and Walmart is not sitting on its laurels, as they say, and wants to bring in someone that could make sure that they can maintain their leadership and growth in both physical and e-commerce terms. So we'll have to wait and see. It was a bit surprising, but it's also exciting when companies take action quickly without waiting and making these sort of decisions. Obviously, for those that are involved, not necessarily the best of all life changes, but that's the way it is.
Yeah, I mean, Caride was been at Walmart relatively little time. They'd flown him in from MercadoLibre. He's Argentine, and Barrientos has been at Walmart for forever. So I think it's also a return to kind of Walmart veterans, return to what they know best, which is sort of very strong execution. And I think that's probably what's behind this. And then focusing a lot on Bodega Aurrera, which is the unit with the best returns, and then trying to turn around Bodega the supercenters, which in Mexico have less attractive returns than because the capex is so high and the average spend in Mexico is quite low, much lower returns than they might have from the other units here or the supercenters have in the US.
Yeah, no doubt. A little bit more of an in-house experience, back to basics, like you said.
Talking on MercadoLibre, they'd had a bit of a hiccup in the first quarter in Mexico. Results, the growth wasn't quite strong. And then the second quarter, they just reported a few days ago, they seem to have turned things around in Mexico. They got total revenues were up about 25%. They generated 1.5 billion in Mexico. That's a 25% growth. And gross merchandise volume was up in Mexico about 32%. That I think was the fastest growth in a couple of years now. And a big increase in their 1P in their first party direct sales, where they sell the end product and take the inventory risk. And also fintech showed another strong momentum, up $500 million of fintech revenues. Mercado Pago, which I consider fintech, but that's about a 28% increase in their loan book in Mexico, which is much bigger than the news loan book. It's it's about $2 billion, about 22% of Meli's global credit portfolio. One of the things I thought was quite interesting was that they said in the conference call with analysts that the credit card is still unprofitable in Mexico. So even Mercado Pago, with all the benefits and all the data they have from MercadoLibre, hasn't been able to make profits yet. They say, as all fintechs do, that new cohorts are more profitable than old cohorts and things are looking better and so on. But it does underline that the credit card business is tricky, and barriers to entry are maybe barriers to entry to being profitable, not barriers to entry to issuing cards are perhaps higher than many of these new players had originally thought.
Yeah, I had a little experience with MercadoLibre recently, Damien. I mean, I ordered something and I was very impressed that they were using GPS technology. They told me when the delivery person was going to be at my door, and she was there instantly. I mean, I got the WhatsApp message and I heard the bell rang. So kudos on that. It's for my generation, this type of service was very, very impressive. And but yeah, I mean, I guess the financial element of Mercado Pago has yet to deliver the profits that everyone is expecting. They might be on their way. But all fintechs are having trouble delivering those profits. But I guess some of the other technology companies also at the beginning lost a lot of money until they didn't.
That's right. So Mercado Pago's credit card business in Brazil is profitable, and obviously it wasn't a few years back. So they're doing the same playbook here. No, I'm talking about that. I have a place in Marinalco, which is Casa sin nombre, calle sin número, Malinalco. And I don't know. I literally do not know how, but the I order a lot on MercadoLibre, and the product arrives perfectly. So they've really nailed logistics, and actually in the call there was quite a lot about how logistics in Mexico have improved. They just cut their delivery costs slash their delivery costs in Brazil, and there's some speculation that they may do the same in Mexico, and that would be great news for the consumers. Although it would obviously hit margins as it did in Brazil a bit, and hurt their overall consolidated results. So one of the reasons I think that the consumer companies are suffering on average, not MercadoLibre, but definitely, as we saw, Walmex and some of the other companies, Oxo, as we talked about last week, had a difficult quarter, is remittances, having gone through this sort of seemingly inexorable climb over the last 5-10 years. We're now seeing quite significant declines, both in dollars and in pesos. So in June, the numbers came out at the end of last week. Remittances were 5.2 billion. That's a 16% year-on-year decrease and 2% decline month-on-month. And in the first half, remittances in Mexico from the US were 29.6 billion from 31.3 in the first half of last year. So that's a 6% contraction. And I think people are saying there's two reasons for that. The one is the immigration crackdown. Less people are going to the US from Mexico, but perhaps more importantly, there's a big crackdown on illegal workers. So there's probably a lot of people are staying at home instead of working and running the risk of being deported. So less people working, less money in their pockets, less remittances. So people laying low means less remittances. And then, as we saw last week, the labor market numbers in the US, which hit the US stock market quite hard at the end of last week, is also quite weak. And so that's probably just affecting even legal Mexican or Mexican Americans. So send money back with their less work, less money. So I think it's probably those two reasons. And it's quite there's a good story in White Paper, the daily email newsletter. Sinaloa remittances were down 26%, Mexico City 25%. So there's big drops. And in pesos, the impact, because the peso's now been quite strong, you see this decline in dollars, it's an even bigger decline in pesos. So that's not good for GDP.
Yeah, I checked the numbers in pesos, which depends on what exchange rate you calculate them on. But I did a calculation on the average foreign exchange, the fixed average foreign exchange for the month. And they dropped in annual terms 11.4 in peso terms, and 5% month to month. Yet for the accumulated number for the first half, they're still up 10%. Yet, you compare it to what was going on in March, they were growing at a 21.6% rate. So yeah, the pace of money that people were used to getting more and more is rapidly declining. Fortunately, I think one good news on that front for the consumer companies is that inflation in June was lower than expected. It brought down Mexico's annual inflation rate to 3.5, if I'm correct, 3.51.
Yeah, and we'll probably in the second half, Eduardo. So the exchange rate in the first half of this year, was weaker than the first half pre-June election last year. So you still saw a peso increase, as you mentioned, but for the second half, we'll probably end up seeing a exchange rate that's quite a lot stronger. the second half of this year versus the second half of last year. Plus, in dollar terms, remittances are going down. So the impact in pesos you're going to begin to see it's going to be negative almost certainly in absolute terms, which you didn't, as you mentioned, in the first half, because you had this kind of weak exchange rate at the beginning of the year because of Trump, but and then you had the strong exchange rate last year pre the Sheinbaum landslide election victory. So, Eduardo, just to finish off, as we're doing, some stories in the foreign press on Mexico business that caught my eye. There are a couple. I don't know if you had a chance to read them. There was a story in Bloomberg on who is Altagracia Gomez. As our listeners might know, she's the president of the Consejo Nacional de Fomento a la Inversión, el Empleo y el Crecimiento Económico. You'd think they could come up with a better name than that. But because I guess she's called the sort of investment and czar of Sheinbaum. She's only 33. She seems to be very close to Sheinbaum. There's a lot of speculation in the Mexican political press about her sort of rivalry with Ebrard, the economy minister, who's in charge of negotiating the USMCA and historically would have been sort of the investment czar. He is also an investment czar. It seems to be every day on X and LinkedIn. There's another picture of Mexican businessmen pledging big capex projects or pledging their commitment to investing in Mexico. Altagracia is from a very wealthy Guadalajara family. She's the heir to Grupo Minsa, the second largest flour company. She's the chair of the broader investment group of her family, the Gomez family. And the story has quite a lot of details on her expensive clothing. Erdem silk dress for a few $1,000s, some Gabriela Hearst bag for over $2,500. So there's some criticism that she dresses in a way that's not appropriate for the Morena Republican austerity.
Yeah, it's been a topic of conversation in Mexico, and I saw the FT wrote a story about it too. Yeah, I think they have an image problem. The president doesn't herself, but her party definitely is becoming a little bit more the way Mexican politicians have always been, if I may say so, which is not good, especially for a party that claims to be worried about the living standards of most Mexicans. Altagracia comes from a very wealthy family. I'm not surprised that she dresses up like that way she does, but I wonder whether she will change her lifestyle or her clothing fashionist style. But yeah, they have an issue there, Damien.
Yeah, I mean, personally, it's her money. She can spend it exactly how she wants. I wonder if there's some misogyny there. I wonder if a man who was dressing expensive suits would get that kind of coverage. And Sheinbaum has, on this front, and I think rightly defended her, saying she can spend the money as she wishes, and she doesn't draw a salary. And I think that she's giving up her time to promote investment in Mexico. So I've been in a number of meetings with her, and I'm a fan.
Yeah, you're right. In her case, it's a very different story, and they're trying to peg her with the other stories that we've seen in the last few weeks about Morena leadership flying to Europe and staying in very expensive hotels, which is very different from her case, from Altagracia's case. So, yeah.
And just two more, without going into it, I recommend you read them. There's a great story in the New York Times on Flip Gordon, who's a former U.S. soldier, and he's become a lucha libre star. And somewhat surprisingly, according to the story, having initially kind of received a lot of kind of boos and from the crowds, he's actually become quite popular in Mexico. We talked in a previous podcast about how lucha libre has been one of the Lucha Libre, the AAA Lucha Libre was bought by WWE and Philip, and they're taking it in a more aggressive way to the US. It's good to see that one of the fighters is an American, and he's now speaks more or less fluent Spanish apparently, and he's got he's kind of crossing the Mexico-US fan base.
I haven't read the story. Is he coming to fight in Mexico? We ought to go see him.
He lives here. He lives here, and he fights in Mexico. I mean, he's married to a Mexican. He has Mexican children, and become a sort of character.
I'll check the calendar. We should go. It's fun.
Also, today, Bloomberg reported that AT&T is looking to sell its Mexico mobile business in what would be, if confirmed, another blow to foreign investor confidence in the country. The story says, not naming sources, that AT&T is seeking over $2 billion for the sale. The company, as some of you may remember, entered Mexico about a decade ago, buying Usercell for $2.5 billion and Nextel for $1.9 billion. And on top of that, according to the Bloomberg story, they've invested over $10 billion to cover losses and investment in infrastructure. And I'm guessing that the continued dominance of Telcel, the regulatory uncertainty with the disbanding of the IFT, and a regulatory situation that they didn't find ideal before that, all contributed to their decision to leave. Plus, of course, the fact that the company hasn't been earning a return on capital for a decade now. Eduardo, what's your take?
Yeah, I think it's a bit of a sad piece of news, not just for the outlook of the Mexican foreign investment situation, but also because AT&T had put up a good fight until now, I guess, or it's still doing it. He had gained a few or a little bit of a market share and was combative. But I guess they've lost patience, or they've lost their mojo, and we'll try to find a buyer now. That's a big question of who's going to come into a market with all the uncertainty that you just mentioned in terms of the regulatory changes that are taking place. So maybe we'll have AT&T for a while.
Yeah, one buyer, I mean, it might be a bit far-fetched, could be a combination of Televisa, which obviously has broadband and fixed telephony through its Izzy subsidiary, and recently took over 100% of Sky, buying from AT&T itself the 40% that it had, and FinTech Advisory of David Martinez, which right now owns about 9.8%, I think, of Televisa. FinTech owns Telecom Argentina. It has access to a lot of capital, because there would be quite a lot of synergies between Izzy and mobile. You'd basically be able to offer triple play, and I would imagine some quite significant operating efficiencies. And then Televisa clearly has maybe the only group in Mexico that has the political capital to stand up to Telcel and get its own kind of regulatory situation sorted out. I mean, Televisa itself has got a very weak balance sheet right now. It's suffered some downgrades. Televisa Univision, its business, its TV business is heavily leveraged, so I don't think they could do it alone. They obviously originally did have the Usercell assets, which they sold on to, if I remember rightly, to Ricardo Salinas, who then sold it on to AT&T. So it would be them coming back, but there could be a certain logic if they could pick it up cheaply. But as you say, a lot needs to happen before this transaction gets closed, if it gets closed, and if it's confirmed, because it's not confirmed right now, just in Bloomberg, as far as I know.
Yeah, I haven't seen it in any other media yet. So, it's going to be, we have to find out whether it's confirmed, and then who's going to come into the market. But like we've said, Damien, I think it's not a great piece of information for the Mexican government. We've had the exit of Iberdrola. Telefónica has always been kind of like with one foot out of the market here, and now AT&T. A tough situation, I think, for for the current administration in trying to promote its foreign investment. Today in the Mañanera, they had a lot of pharmaceutical companies talking about their investments in Mexico, but we know that sometimes in La Mañanera, the numbers are a little bit hyped rather than later being confirmed. So we'll have to wait and see what the statistics say about foreign investment, direct foreign investment, new foreign direct investment in Mexico. But the picture is a bit gloomy.
Great. Well, that's all I have.
That's also on my end, Damien. Great to talk to you. And let's move on to our interviews.
Today's guest is Carlos García. Carlos is president of AmCham Mexico, and he's also the senior vice president for Latin America and the Mexico country head at Valero, the energy company. Carlos leads Valero's Mexico operations and the commercial strategy across the region. More than 25 years in the energy sector, including senior roles at BP, Frontera Energy, McKinsey. He's a key player on US-Mexico trade through his AmCham hat and the energy transition and regional energy issues through his Valero hat. Carlos, thank you very much for joining us. How are you today?
Good, Dave. It's a real pleasure to be with you and Eduardo. Thanks for this opportunity. It should be fun.
Great. Well, let's start with AmCham and USMCA, as that's a big subject. What role can American companies in Mexico, members of AmCham, play in pushing USMCA forward, getting it renegotiated or re-agreed? And what more needs to be done on that front?
Sure. Well, I think that the American companies play a pivotal role in this process. If you think about some of the members of the American Chamber, of which there are over 1,400 members, if you look at the American companies, some of them have been in Mexico for over 100 years. And over that time, they've been investing millions and billions of dollars, hiring a lot of locals, generating a lot of economic benefit here, not just in Mexico, but also in the United States. Because, again, throughout that time, they've been building up this sort of supply chain integration between the two countries. And we always say, at the AmCham, that more than simple trading partners between the U.S. and Mexico, we're involved in the sort of co-production process where parts that go across the border 5, 6, 7 times before they're integrated into a final product. And so as these companies make decisions about manufacturing and where they're going to source parts, they really look at it from a regional standpoint, right? And they see that jobs that they create in Mexico also are creating jobs in the United States. And so and they've seen the efficiencies that have been garnered over that time, especially since the original NAFTA was signed many years ago. And so I think that there's an economic benefit to the companies, economic benefit to both countries, and I would say all three countries with Canada as well, that they're very interested in defending. And I think that what's important is that those stories are really told, right? That both government officials in all three countries, understand the impacts that this trade agreement has had in all three countries. I think it's important to see that, or sometimes it's a little surprising that people in Washington, for example, a lot of decision makers are not aware of all the nuanced impacts of this trade agreement and all the benefits that are being created and all the jobs that are being created both in the United States and Mexico and Canada as a result of this. So I think that what the AmCham companies can do is really be those storytellers and really create an environment where decisions are made with facts, understanding the benefits so that they can move forward.
And is the Mexican government reaching out to AmCham and to members of AmCham, the big American companies that have kind of strong lobbying efforts in Washington, D.C., and saying, help us out? Or is the Mexican government going straight to the Trump administration and leaving you guys out of it?
Well, I mean, I think they're developing their own relationships. The Sheinbaum administration really being spearheaded by the Secretary of Economy, Marcelo Ebrard, and then in Cancilleria through Roberto Velasco and the Canciller himself. I mean, they're developing their own relationships, right? They're in Washington every single day, or almost every single week, I should say, working on this trade, and they do reach out to us more for information, right? To understand, how this integration between the two countries or the three countries has evolved, the amount of trade between the three countries, the benefits that are being generated. So they're reaching out to us, not in a sense for us to play their role, but to augment their efforts and complement their efforts and provide information and resources, on the various economic topics that are being discussed.
And do you think you're having a positive impact? I mean, do you see the American companies helping in this process, or is it basically up to Trump to do what he wants to do?
I guess that's a good question. I'm not sure anybody really knows, Yeah, I think obviously the American companies, members of AmCham, we're sort of tackling this through different angles, right? Providing information to the Mexican government through the chamber itself, the American Chamber, doing concerted efforts to reach out to stakeholders in all three countries. And create that positive narrative. And then a lot of our company members have offices in Washington, have lobbying efforts, and so we're all sort of pushing in the same direction. And, I don't know. We'll see. On the one side, you do see that the Trump administration is taking a pause with this last 90-day extension of the implementation of further tariffs on Mexico. I think it reflects two things. One, their understanding, both presidents understanding, Claudia Sheinbaum and Donald Trump understanding the complexities of racial relationship. In particular, we just focus on Mexico and the United States, and two, the importance of that relationship, right? And that it needs time to really study and analyze and figure out what's the best path forward. And then also, I think on the positive side, it seems that both presidents and their various cabinet members have a mutual respect and understand, and they're working towards a mutual understanding, right? There's a lot of objectives that Donald Trump's trying to reach vis-a-vis the relationship with Mexico. Obviously, Mexico is also looking for a mutual beneficial outcome. But I think there's an understanding and a respect there that the countries have to work together to solve the issue. So, ultimately, it looks like, the President Trump, is calling the shots here. Although, one thing that is interesting, and I've had a lot of people ask me about this, of how the process is going to go with the renegotiation or the review of the USMCA. And and there's speculation that process is going to be fast tracked, and by the end of the year, that the review is going to kick off. I think one thing that's clear is that in the United States, even though there's a lot of talks about the tariffs and this, that, and the other, I think the U.S. government is going to follow the process. The USMCA, especially on the U.S. side, has a very specific timeline of how the review is going to go, and I think ultimately the U.S. government is going to follow that and follow what's in the agreement, and then come up with some changes, and adjust as needed for the current status of the relationship.
Just one more question on the USMCA. Trump, in his last Truth Social post, said that Mexico was agreeing to remove all its non-tariff barriers on presumably in agriculture, in telco, in energy, and pharmaceutical.
Right.
And presumably that's like music to the ears, the AmCham, right? This is stuff you would love to happen.
Yeah, well, absolutely, absolutely. If you look at, if you pick one, let's pick pharma. To get a new medication or medical device approved for the COFEPRIS, which is the agency that manages all health related issues from a government standpoint, that process can take 18 to 24 months. It's very difficult. There's always constant changes on the rules for importation, even documentation. The company that I represent, in fact, just recently had a little bit of a hiccup in the import of fuel. We import fuel into the country, and they had the government had changed the form, literally the physical form that you need to fill out to certify the quality of the fuel you're importing. Well, they didn't notify anybody. And so we submitted the standard form. They kicked it back out and they said, you're not submitting the right form. We're like, what do you mean? We've been using this for 3 years. And they said, oh, it changed here. Now you got to fill it out. And you got to fill out this new form. We submitted that. At the end of the day, it took us 4 days to get that certification approved, which means we have a ship out on the Gulf floating there for 3 or 4 days unnecessarily, just because there was a form changed. And so if you're able to fast track those processes, especially when the other big issue is registering the intellectual property, right? And registering trademarks in Mexico. There's a huge lag. The IMCO has a huge backlog of cases. It takes a long time to get things registered and through that process. And I know that the new head of the IMCO is very clear on that, and he's got a plan to work to reduce that time, bringing in more not inspectors, but those that process these and review them so that it's quicker. And I think that that's super important for companies, because all those delays, all those times. It just means money. It just means money and effort, and it's very difficult. So it'll be great to see that occur, and we'll see. Time will tell.
Carlos, using the reference you just made to your company's problems with this form, what can you tell us about security issues in Mexico, or in the case of your own interest in your company, about fuel theft and all these problems that we face in this country? Are they curtailing the interest in Mexico? What's the outlook that you have from your own experience and from the members of the chamber?
Yeah, I think there's no surprise. Security issues is one of the major issues of concern, not just for the American companies doing business in Mexico, but for all companies, and I would say all citizens. And it's the complexities of security matters in Mexico just elevate the cost of operating in the country. And companies are having to spend a lot of money. We do a survey every year or every few years among our members about security matters, and you see, some companies are spending up to 6% of their operating budget on security matters. Some from 2 to 6%, and that's like an additional cost, an additional tax to do business in Mexico. And so it can definitely disincentivize investment, right? If you can't operate and you can't keep your staff safe and your merchandise safe, it definitely can cause companies to pause on their decisions. And so it's definitely a critical issue in Mexico. And again, no surprise. And anything that can be done on that front will be beneficial for not just the relationship with the United States and Mexico, but for companies and people living here in Mexico. So,
and in the experience of Valero, what can you tell us about? You've been subject of some fake invoicing and things like that.
Yeah, the fuel business is it's been a challenge. let's put it that way. It's a difficult business. I mean, it's no surprise. It's been on the front page of the Mexican newspapers almost on a daily basis. The impact of the contraband, not just the theft of fuel, but just also the contraband, which has even become a bigger problem. So, these companies bring the product in, don't declare it or falsely declare it, and avoid paying taxes, and gives them a huge advantage over companies like ourselves when you're out in the market, right? And they've avoided these taxes. So it's a huge burden on the Mexican government because they're losing those tax revenues. And then it makes it very difficult for companies like ourselves and our service providers. So we have these long-term terminal service agreements with several terminals, companies like Sempra that has 3 terminals that we operate out of. New Star has one in Laredo that we operate out of, and then OTM in Altamira. And we have long-term agreements with them. And if our sales are down because we can't compete, then we're not meeting our obligations with our terminal operators. And so, these terminal operators that we work with, they have invested over $1 billion in infrastructure in Mexico. And so it puts those investments at risk from these terminal operators. And so, we have seen recently, or this year with the administration, with the current administration, a concerted effort to put a stop on this practice. And we're hoping that those efforts continue and are successful. And what's interesting, we've also seen activities happening on the U.S. side. There was recently an arrest of some owners of a terminal in South Texas that was being used as sort of a staging area for some of this activity. And so it looks like the pressure's coming from both governments, from both sides, which I think in the long term will be beneficial, because it not only affects us, but even the state-owned oil company, Pemex. Their sales go down, their margins go down, and so it's a difficult environment. And so I'm optimistic that things are going to change and keep moving in the right direction. I think, like I said, I think the Sheinbaum administration is focused on putting a stop to these practices.
And getting back to the trade issue, I'm a bit surprised of how little effort, and maybe I'm wrong, companies have put up to alert the U.S. citizens or even the Mexican citizens of the benefits of trade. I remember Carla Hills, who negotiated the old NAFTA, complaining about it or saying that there was a greater need to explain to the American public that many jobs that were lost were overcompensated, or even there were more increases in job creation in the U.S. by NAFTA. What's your feeling, and why haven't they, if I may say so, put up a fight to defend something that they believe in and that is very profitable for the 3 economies in the end?
Yeah, that's an interesting question, and I think it goes back to some comments I made earlier that I agree. I think there is a lack of understanding in Washington, in particular, of the benefits of the USMCA and to the U.S. Economy and what that implies. I think that in Mexico there's probably a little bit more understanding, just because Mexico's a manufacturing-based economy. 80% of our exports are destined to the United States, and so I think there's more of an understanding, an overall understanding of the trade with the United States, and that's my assumption. But in the U.S., it's just much more difficult for them to see it on a daily basis. Now if you go to the state of Texas or New Mexico or Arizona, California, the states that border Mexico and see that trade every single day, people are very aware, very interested, and very attuned to the trade with Mexico. But as you go into the rest of the country, and again, you go to Washington, and they don't understand that. You don't understand that. We receive congressional visits to Mexico, and the AmCham as well has had several meetings in Washington, D.C. In fact, in a few months back, we hosted one of our board meetings in Washington, and in conjunction, we were able to meet with a lot of government officials. And when we share statistics and information about the trade, it's amazing that it seems like it's the first time they've ever heard it, right? And I think you're right. I think we need to do a better job. I think we definitely need to do a better job, and that's one of the roles that the American Chamber is trying to play. Call out those stories, craft these messages. And so that, again, there's a broader understanding about this. There's some interesting statistics that we've been able to pull together, and this is from the labor statistics in the U.S. and looking at the data from the INEGI and the EAMS and whatnot. And you're finding that for every manufacturing job created in Mexico, there's a manufacturing job created in the United States. And people don't know that. When you say that, they're like, it's they don't believe it, right, at first, and then you have to show them the numbers. But that speaks to, again, this co-production process. So if somebody is manufacturing a television set in Mexico or assembling a television set, well, they're buying high-value components from the United States and from others, right, and then bringing them back in. And so, and these are the stories. I mean, there's I have a daughter that sits on a board of a company, a cattle company, that raises raises cattle in the United States, brings them into Mexico for feeding to fatten them up, and then they send them back and butcher them, and vice versa, right? So is that cattle Mexican, American? It's regional, I guess you should sort of speak. But I mean, it's a simple explanation. Same thing with, you talk about Constellation Brands, and they produce the number one and number two beers that are consumed in the United States. All their production in Mexico, beer is sent to the United States, but the hops and barley that they use comes from the United States. And so, anyway, I think that these are the kind of stories that paint that picture, and again, I think it's important for the companies to do that, and I think it's important for the AmCham to be that voice, And then another story that people don't hear about much in the United States is Mexican companies investing on the U.S. side. You have Bimbo, one of the world's largest, if not the largest, bread company that has a lot of investments in the United States, Cemex, Grupo Mexico, the mining companies. And so the Mexican companies are also investing in the United States. And so I think you're right. I think we have to do a better job.
Carlos, last question from me.
Sure.
You're an American. I think you were brought up in Mexico, at least part of your youth, and now run an American company's Mexico division. Do you think by 2030 or by 2028, US and Mexico will continue on this path of convergence that we've seen in the last 30 years? Or do you think we're going to have a pause in this ongoing convergence?
No, I definitely see the relationship continue and strengthen. I think the challenges and the threats, I guess I would categorize them as threats that President Trump has talked about, and also our concerns of President Sheinbaum. They're challenges that are best attacked together and solved together, and it's just, our relationship goes deeper, again, as I mentioned, deeper than just trade relationships. It's co-production. They're family members, and there's this cultural affinity that is very, very strong. And so I'm optimistic. Will it be called USMCA? I don't know. Will there be adjustments and changes? I'm sure that are natural as the economy and the world economy really changes and evolves. These trade agreements have to also change and evolve, and I believe it'll continue, and it'll continue to strengthen. But again, I think it's going to take effort. It's going to take political will and everybody involved. I think the government and industry and civil society focused on strengthening those relationships moving forward. So I think if we have a conversation in 6 years, things may look a little bit different, but the relationship will continue, and these supply chains will continue to strengthen and grow.
Well, Carlos, hopefully we won't have to wait 6 years to talk to you again. This is very, very insightful. We appreciate your time. Thank you for coming into this show.
Yeah, no, Eduardo, it was a pleasure, and Damon as well. It's been a pleasure, and we'll talk sooner than in 6 years. For sure.
I'm sure we will. Thanks, Carlos.
Yeah. All right. Take care. Thank you.
Today we have with us Raúl Livas Sondo, who brings decades of expertise in Mexico's energy sector to this Mex Moves podcast. Raúl, how are you?
Fine. And how are you?
How
are you, Eduardo?
Thank you, Raúl.
Raúl's a former CEO of Pemex, former head of Pemex Petroquímica. For the last 15 years, he's been a consultant on energy matters in Mexico, advising clients on navigating the regulatory, operational, and financial challenges that many of them face. He's a professor at the UTAM, has a PhD in economics from MIT, and he's going to help us understand the new Pemex strategic plan, which was unveiled this week, from upstream expansion to the energy transition strategy. What is good, what is bad, and what remains to be seen. So, Raúl, why don't you give us a quick summary of how you see the plan, and then we'll delve into more details.
Yeah, well, it's good news. If you look at the plan in the context of last week's PCAP vehicle they launched in Europe, the government is tossing an unprecedented amount of money into Pemex in a very short period of time. No, it's the equivalent of Dos Bocas Refinery Plus type of money, and that means it's serious. The previous announcement included $12 billion in money to essentially to pay this year's financial commitments for Pemex, and some additional money. It's still unclear how much to pay outstanding invoices that Pemex has. And yesterday's plan has two portions. One is a new vehicle that was unveiled by the head of Banobras with 250 billion pesos, around $14 billion in fresh money to execute the strategy, plus a good set of projects. Some of it had been leaked to the press before in terms of the portfolio, but we have a very dramatic injection of money and projects with money to do what the government wants to do. So now we face some omissions. There's still some fog on how much of this money is going to pay Pemex providers of a service and reinforce the supply chain. That's one of the remaining questions. And obviously how much the government is going to help in having a streamlined execution, which has been a challenge in Pemex for many decades, I would say, and how all the parties are going to work together. But overall, I think it's good news. It's fresh news. It's putting some action in the sector that needed some clarity. Plus, there are some very relevant question marks on how the whole thing is going to perform, and given the ambition that the government has presented with this plan.
I mean, it's clearly good for Pemex that it's getting tens of billions of dollars of extra money. But is it good for the Mexican taxpayer that this money is being plowed into a loss-making company? Will we be talking in 5 years' time about another rescue of Pemex?
Essentially, what's the biggest question there is, will this money that was announced that's going to be funneled through Manobras will have a positive rate of return or not? That's the big question.
What do you think?
It depends. I mean, there are some interesting guys in the new team of Pemex. I guess part of the plan was executed by or was drafted by Jorge Alberto Aguilar, who's very experienced he's the new planning officer, and he's very experienced in execution. He published a note for those who are interested on using the FEL methodology that was out of use from Pemex in the previous administration. So that's fresh information on an emphasis on execution. But there are lots of, I mean, from my perspective, the question is, will the Ministry of Energy have a centralized approach to execution, or will Pemex be able to behave more as a company? And it's not clear given the whole set of signals. That's one of the remaining issues, and it will probably affect the execution, the execution of the plan, how they solve those things. No, but it's, as I mentioned, it's interesting, but the challenge is not minor. No, but obviously it's much better than what we had a couple of weeks ago. No, the sector was dying, and now probably we just need some additional news on how the accounts payable are going to be addressed, and that will sort of set the sector moving. It's a big bet. The government is depending on a successful execution. I mean, you won't stand another sexenio saying that it was the neoliberal regime of Peña Nieto that made a mess. So the government has no option but to do things well. But it's not easy given the constraints they are putting themselves in.
And if we go into the different parts of Pemex, if we start with E&P, which is obviously the most important part, they talk in the plan about bringing production up to, I think, an average of 1.8 million barrels a day from maybe 1.5 right now.
Well, you have there was a change in methodology a couple of years ago. So before we used to measure barrels of oil, and now we use barrels of oil equivalent, which includes a lot of gases. Some of the most important fields that were exploited in the previous administration, like Izachi, were mainly producing liquids. So it depends on what you talk about. If you're looking at straight barrels, it's 1.3. If we include the liquids, it's 1.60 something, also almost 1.7.
So do you think it's credible that they're going to get it back up to 1.8? And how are they going to do that? And will the private sector players want to partner with Pemex in the Sama field and other fields to make that achievable? That's
where the importance of the mechanism that Manobras announced yesterday lies. Because essentially what Manobras said is, I'm going to put $12 billion. I don't know if they can execute $13 billion of money in 1 year. This vehicle is supposed to last only for 2025 expenses. And the way it's structured, the new contracts essentially say, okay, you have the projects. Pemex issued a list of projects, and you're going to get money to execute from Manobras for the project. So essentially, but you need to pay taxes, and really the load, if we take into account that investors are going to have a margin by operating these contracts together with Pemex. And it's not as strict as the restriction they had in the electricity sector, where Pemex needs to have a minimum of 40% of equity. But they will probably not disburse anything, so it will need to be covered as a recognition. But it depends on how much you can leverage with Banobras, the project. You could be executing with very little money. So I think it's going to be attractive for private investors, because essentially the government is putting the money on the table to execute. So I think it's going to, on that account, it's going to work. The relevant question is what you said before: is this going to be good for the taxpayer or not? Because all the Banobras money is coming from the taxpayer, and this new vehicle is the same as the Luxembourg vehicle, where it has the full backup of the federal government. So essentially, public debt increased with these two structures in $26 billion. So it's not a minor thing, but the money is there. I think these programs will have some level of attractiveness, because it's if you don't have to put that much money in, it's something you can do, and you have a lot of upside. So in a sense, a lot of the questions I've been listening about the viability of this structure, I think are not looking into the detail of how it was announced. The set of the portfolio of projects they have looks very detailed. So it says how much money I need to. Since the program was launched yesterday, I haven't been able to do my homework on the specific details of how much barrels you get from the projects that are on the list. But it should seem viable to reach the 1.8 if this portfolio, if it's executed correctly, and you have the money, and you need to have good partners who execute the thing. So if you call properly the Halliburtons, the Schlumbergers of this world, and they are in for it together with Pemex, probably with another partner, that might give an interesting result. If you put strange players that have no expertise, and then you might get different stories. So I think that is one of the things we should put our finger on. So on the E&P side, I think the news are good. The downstream side, if we want to get a little bit later on that, is a bit more nebulous. No, but on the E&P, it's clear what they want to do, and there's money to do it. And given that E&P is 80% of the whole package, 80% of all Pemex investments goes to E&P, they're going to be able to the demand side of the investment projects is going to be there. Let's put it that way. No, we don't know if the rate of return is going to come, but at least on the demand side, it's gonna be a boom.
Great, Raúl here, Eduardo. Just for our listeners, EP is extraction and production, right? You're talking about oil production and extraction. I want to go to the downstream element that you mentioned, that it's not as clear. Would you have liked to hear more on Pemex canceling, on restructuring, reducing its refining capabilities, as it is where the company loses most of its money? What do you think on that side of the equation?
We need to look in more detail at what's happening. Obviously, downstream is a mess, but we need to look at the details of the mess to see what's going on. If we go at the bare bones, and we have all these conversations we had in the past that Pemex had reduced its production in the refineries in order to reduce the losses, because it's very expensive for Pemex. I think that it's a very confusing statement. Why? Because what happens is that you have a lot of overhead costs that have to be assigned to the different operating areas of Pemex. Like the medical services, which are very onerous, and it's very unusual to have your whole medical service inside your company. This happens because Pemex was created before IMSS issued by decree. So Pemex got to have its own medical service, and it's something the union cherishes much. But it's, for Pemex, it probably would be better to get all the workers a very expensive private health insurance service, and it would be cheaper. And the way these costs get shared among the different divisions is by headcount. So you have an onerous overhead, and you have refining that must have around 50 to 60,000 people, while EMP has 30. So you get a lot of the overhead charged to refining. Then you have two other big problems in refining. If you are a regular refiner, and this is one of the challenges the administration will face. If you're a standard refiner, what you want to do is you want to optimize the mix of crudes you put into the refining system. No, and as you know, it's good. The audience probably doesn't know, but some of Mexico has 6 refineries, 7 with Dos Bocas, and some of them have not been configured to process heavy crude. So you have a wide array of effectiveness in the refineries. In a regular refinery, you would purchase the optimal amount of crude at the specific qualities that the refinery needs. In Mexico, what we've done for many years is that the export market dominated, and Refinación got whatever crude was available. So you ended up putting a lot of heavy crude into refiners that were not prepared to process the heavy crude, and that made you produce a lot of fuel oil, which is part of the way of the reason you reduce the margins. So if you're going to not allow Refinación to optimize the mix of crudes that go into the refinery, then they're going to have a big amount of losses. In the previous administration, what happened is that there is a very quick way to fix this, which is to import crudes. So if you import the right amount of crude and you toss the right amount of crude to each refinery, you get a very significant improvement in operating efficiency at the refinery level. But if you say that it's an issue of national sovereignty not to import crudes, then you are stuck with a very bad mix of crudes, and you see it in the amount of fuel oil we're producing. So we do crazy things like also all this nasty heavy crudes to refiners that can't process it, and then we have the problem of selling to CFE fuel oil at very reduced rates because it's coming out of your ears. So that's an example of the big operating challenges Pemex has ahead. If they can fix those things, then we're talking of a whole different type of scenario in refining. You can reduce a lot of the losses. The other thing is how to handle the pension structure, which probably would need to be dealt with separately to manage the problems, and get closer to the bare bones operation of the refineries, which could, if we take all these crazy things from refining and we look at the bare business, we might approach to something closer to break even. No, I'll stop here to let you ask more questions on this, but I have much more to say on what to do in the refining business.
No, well, let me just add that yesterday they did say that they wanted to stop producing fuel oil. So that's an indication of what you're saying, that they are looking at making the refineries much more efficient than before. At some point, the CEO of Pemex also said, and I don't know what he meant, maybe you can explain to us, that he wanted to migrate traditional refineries into petrochemical refineries. Do you know what that means? And
yeah, I probably think that was a comment out of context. I heard some comments, but I didn't catch the exact phrasing. There is this old project if you look at the different structures in Pemex, if you look at the petrochemical industry, there was a half-baked petrochemical refinery, which is Cangrejera. The Cangrejera complex has the distillation tower of a refinery, and all the old guys wanted to make this a full petrochemical refinery. So I think he's talking of something on the margin. I don't know if it makes sense to do it, but certainly to make another refinery is an expensive project, but it's in the heart of the old petrochemical people who are close to the president and to the CEO of Pemex, that they wanna sort of retake these petrochemical projects. I don't think he was meaning that the whole system would go into refining, because it doesn't make sense. No, it makes sense there in Cangrejera. It probably makes some sense in Salamanca, where you have all these specialties and you could sort of revamp the refinery. It's not scheduled to have a coker, so you could probably do something on the complementary refining stuff there. It already produces lubricants and other types of specialties. So I think it doesn't go beyond these two projects.
What's your overall opinion of the new CEO of Pemex? I mean, he's a known academic, but had no experience before in managing companies, and he's managing Mexico's largest company. What's your overall sense?
Well, he has a tremendous challenge. I think obviously to have no experience running a large company is an issue. But on the other side, one of the things that has been very damaging for the conduction of Pemex is how close you are to the president. And Victor is very close to the president. So that's a plus for him. So if he surrounds himself with the right people, and he gets the possibility to execute, he might execute well. But it's a big challenge. I mean, the Mexican government in general has been very confusing in the structure it uses to manage public companies. Let me just tell you an anecdote from my earlier phases working in petrochemicals and the like. Mexico is the only country in OECD that has its state-owned enterprises to be part of the public budget. So you have all these crazy budgetary restrictions that come with being a public company that are extremely costly in terms of efficiency. And that was not the strategy the government decided to follow, to sort of make Pemex look more like a company. The decision was to make it more public. The whole idea of changing from a productive enterprise of the state to a public enterprise of the state sort of goes against the idea of having a more independent company like Pemex. That is a big challenge because it doesn't clarify the way forward. So I think that is the most important challenge I see for this to be successful is internal, in the psychology of the government, to how in designing a right structure to manage this. No, and this division between public and private is just too crude to go into the necessary management details you need to take into account. And we're going to see some of that later this year, I believe, and that will give us the possibility to make a better assessment on how this can work.
Raul, on that subject, the President Sheinbaum has talked a lot about the benefits of the centralization of Pemex and removing the independence of the business units, E&P, petrochemicals, refining, and so on. Is that just window dressing, or will it generate significant sort of real cost savings?
I don't think it will create any significant cost savings. There are easy ways and complicated ways. I was in Pemex in two epochs. And in one, the CEO had full control of the boards of the subsidiaries, and there was no problem. He had control of the whole company because he had majority in each of the boards. In my second time around, the CEO did not have control. So there was a lot of fighting between the Ministry of Energy, the Ministry of Finance, and everybody said things at the boards. And so it was unmanageable. Really, but it's not something that you need to unite to fix. If you give control to the CEO, like in a normal company, then you can fix that problem right, quickly and without much spending. Because now I imagine the guys at Pemex have to rewrite all what they call the organic structure, all the bylaws on how the company has to operate, and that's going to take the whole year. So it's difficult to land it, given that you make it more bureaucratic and less entrepreneurial.
So if that's not going to bring about a lot of savings, another way of saving money, maybe the most obvious way, is to reduce the workforce. By most standards, even accounting for insourcing of medical services and things, Pemex has a very big labor force for the revenues that it generates. How easy would it be to cut unionized workers?
Well, you can take a look at some examples. If you compare what happened with Telmex when Telmex was privatized, one of the things that Carlos Slim did at Pemex is he reached an agreement with the union not to fire anybody. Why did he reach that agreement? Because he needed to toss people around. There was lots of inefficiency. Actually, fixing that inefficiency contributed to making him the richest man in Mexico, and without firing anybody. So there's a lot of light put on the labor issue, but it's a small percentage of total cost. And really, I mean, you could place all these guys if there was a good negotiation serving in the gas stations, or I mean, you have lots of places where you could use that amount of labor efficiently. So it's not just cutting it, but rather redesigning the way the company makes decisions on the day-to-day level. What happens when you have these bureaucratic controls is that all decisions are taken at the top. So the guy in the gas station really can't have any liberty to make decisions, and that's what modern business is about. You want to make sure that the people who deal with the customer face to face have some flexibility in making the customer happy. No, and that is out of order in a bureaucratic structure. Now, the other thing is, how do you deal with the possibility of extracting rents? A lot of the strong unions behave is that if there is a rent, it could be a monopoly rent, and in Pemex it could be a monopoly plus a natural rent. If the union is taking part of that rent for itself, and that's not good for the country, because you don't want the monopoly rents to be sent as a burden to the customer. So that's the type of a very complicated balance you need to do, and it's a lot of management. I mean, I didn't hear a lot of discussion about management yesterday. I haven't heard. I mean, this reducing structures is a very bureaucratic way to reduce costs, but it's not talking to you about the key elements you need to improve the performance of a company like Pemex.
They also talked in the plan yesterday about reducing outsourcing of services and insourcing services that have gone to third parties. I assume the sort of Halliburtons of this world. I mean, is that doable? Is that one way of reallocating labor in a more efficient way?
Yeah, well, the issue is, how do you decide what to do inside the company and what do you want to do outside the company? And that's the big question. I mean, I'm an economist, and that's the big question of organizational economics. Coming from an economist called Douglas North, who said, "How do I define the boundaries of the firm?" And the question is, say, okay, when do I decide to provide some activity to the market, and how do I decide to put that activity into the hierarchy? And there's an efficient way to do that. That's what the market does. That's why when managing a company like a company achieves, because you need to sort of couple with your environment in an efficient way, and that means selecting what to do. But if you make these very high-level decisions, say has to be public and this has to be private, you put a huge wedge on things that should flow naturally, and in some sectors, the line should be drawn somewhere, and in others, in a different place. And Pemex doesn't get to discuss about that. So that's one of the challenges that the plan has. And given that the government has full command of Congress, I guess they can improve on that quickly in the bylaws, or make further adjustments to the bylaws, and move things into the direction of efficiency. But one of the dangerous things here is that when you say you have a social objective rather than an economic objective, that is when it's very difficult to draw a line in favor of efficiency. And that's going to be a challenge, and that's the type of thing we need to look at from as outside observers to see if this program is going to work. So it's complex decisions. I mean, there's no way to have an easy back of the envelope solution to these topics. No, it's as we mentioned with refining. I was just scratching the surface with the topic of fuel of oil mix going into the refinery. You have a lot of items that need to be improved. Pemex knows what needs to be improved. I was aware, for example, of a study that was done comparing procurement in Deer Park and procurement in Pemex. And Deer Park, whenever they had a maintenance job, had selected its suppliers a year and a half in advance. The contracts were signed 6 months ahead. Pemex typically doesn't know if it's going to have a budget 6 months ahead, so it does maintenance on unscheduled stops that happen when something breaks down, rather than plan your maintenance to have the longest run of a refinery. So there are lots of things that need to be addressed to make sure this works, and that's what we need to see, if this is landed, or it's going to end up in a classical bureaucratic fight with the Ministry of Finance hauling in one direction and the Ministry of Energy hauling in a different. And if we start to see all these internal bureaucratic battles, then that's a sign that the thing is likely not to work. And it has the possibility. I mean, there's nobody to blame but the guys who are executing, because they have no outside constraints except the access to money. But what we saw the last 2 weeks is that access to money is not a big issue right now. I mean, if you're able to toss in $26 billion in a week, it should be enough money to haul out almost any company out of significant trouble.
But that's 26 billion not spent on hospitals, on schools, on public transportation. I mean, but there's an opportunity cost to that 26.
Sure, but also you need to make sure that there's gasoline in the streets, and if you just can't stop it one day. I mean, you could stop it slowly, or you can plan stopping it, but it's not a decision you can make, and then you incur in a very complex political battle that's been lived, and I mean, we've been stuck in that political battle for the last 20 years.
So there's also in the presentation, there was talk about Mexico investing more in natural gas. Mexico, especially CFE, has become massively dependent on natural gas from the US, that's been able to produce a lot of natural gas cheaply, due in part to the shale gas revolution over the last decade or so. Do you think that Mexico has a chance of substantially increasing its natural gas production and reducing that dependence on the US? Because it's also a strategic, political, and diplomatic issue that anytime it wants, the US could
just shut the door and we're dead. And the power goes off. Yeah. I mean, if you think that Pemex produces gas basically for its own consumption, give or take a portion of a BCF, then all power produced in Mexico and all industry and everything runs on imported gas. So that is a much important national security consideration than anything you can do with fuels. That was the whole justification of building those bocas, and said, okay, you really want to work on sovereignty, look at the gas issue. Now, if you look at the potential, the natural gas formations that that occur in Texas, that are in the heart of the shale revolution, they extend into Mexico. So the natural resources are there. So it's just our intellectual limitations, our ideology that limits the exploitation of that gas. And so will something happen there? Given the way they structure the law, it says that if Pemex doesn't want to do something, they can toss it out to the private sector and do something similar to the previous rounds. And certainly Pemex doesn't want to spend its at least until it is fully restructured, it doesn't want to spend its money into doing these gas projects because they are much more expensive, and they run on much smaller margins. So that's a place where private investment, I think, would make a lot of sense. But let's see how they play it. They have all the possibility legally to do it under the new laws.
Raúl, shifting a little bit the conversation towards the fiscal end of Pemex, are you comfortable with the level of taxes the company is paying today? And how relevant was it to lower the tax burden on Pemex to make it a profitable company?
Well, the tax discussion with Pemex has always been a metaphysical discussion. Because if you see Pemex as part of the government, it's the right pocket talking to the left pocket. So I think in the past, what happened is that the government fixed prices for Pemex, assuming it was efficient. So you put best practice type of cost, and so Pemex should achieve this cost. So whatever Pemex, but Pemex had Pemex management and Pemex budgetary restrictions. So Pemex could never reach those efficiency levels. So essentially, Pemex was always losing money, and it was borrowing money to pay taxes. So finally, the accounts, the bills had to be paid, and that's what we're seeing today. What we see is a tax rate that is probably for some fields very low, and for others very expensive. And but it depends on how to have a clear structure for the future where you should achieve a level where Pemex can stand on its own and then put the tax in a way, because if you don't put the tax low enough, then you end up paying. If once you decided to have Pemex be a public enterprise, you're going to put the money through lowering the tax rate or through fiscal contributions, as just happened this week. So you need to strike a balance between those two. It's not an easy discussion, no. But if you talk about the tax level, right now I think the tax level is low enough, but we need to check the portfolio of projects and see what that means in terms of having Pemex being able to pay its debts.
In that sense, Raúl, and I know you've told us all throughout this conversation that there are many ifs to probably know what's going to happen in the future, but the president was very adamant yesterday to say that Pemex will stand on its feet by 2027, that it will not need any further rescue packages, that it will be, let's say, operationally profitable. What's your estimate, or how much of a probability do you give to the current plan that it will be able to achieve that goal, that in 2027, Pemex will be self-sufficient? Let's put it that way. What's your estimate?
Well, you need to. What happened with this money? We're having $26 billion injected into Pemex in the form of debt. Even low interest-paying debt, it's still a debt. So if all that has to be paid back by Pemex in its current situation, I see that is going to be very difficult. But as of now, it has the full support of the federal government that is backing all these instruments, but they are structured as Pemex debt, both of them. So if that goes into the balance sheet as debt, it's going to be very difficult to have Pemex stand on its own by 27.
Thank you, Raúl. That was super interesting. You sound more optimistic, cautiously optimistic, I would probably have to say, than other people that I've talked to on Pemex. So, but thank you again for sharing your knowledge and thoughts on these very interesting times for Mexico's largest company.
Yeah, happy to talk to you, and probably the plan was just issued yesterday, so probably we can come back in a couple of months if you want to have me here, and I'll be happy to give an update with more information on how it starts to develop.
Let's do that. I think that will be very much appreciated by our listeners.
No, thank you very much, Damien, Eduardo.
Well, that wraps it up for us this week. Thanks for listening. We hope to have you back next week. Don't forget to subscribe and have a nice week.